Alright, okay, good evening. Welcome to today's session. So as usual, we'll get started. But first thing here, of course, quick disclaimer. Okay, everything that we're presenting over here are solely based on my personal opinion. So they do not directly translate to any form of trade signals or advice. And obviously, trading in the financial market involves risk. So make sure you have your due diligence and risk management in place. Okay. Now, before I get started again, just want to remind everyone, especially if you are fairly new in the finance trading industry, there are obviously a lot of scams out there. And what they are likely gonna do is they're using my name, my profile, and on social media, right? Whether is it on Telegram, on Instagram, on Facebook, or even recently I realized some of them are actually doing it on Discord as well. Okay, so they would use my name, my profile pic, and reach out to new traders, to new people in this industry. And usually the message will go along, asking how is your trading, and then they'll start to introduce to you, some investment schemes and things like that. So if you receive any message like that, just make sure that you do a double check, because I don't PM you, directly and ask you for any form of investment, right? I don't do any of sort. So if you actually receive any message like that, just be very, very careful and be vigilant, okay? The last thing you want to really be is, fall into such schemes, and then after that you start putting money, transfer money to those people, and then you can't get your money back, okay? So there are many out there. I've seen, starting from Facebook going into Instagram, and then they started doing it on Telegram, and then very recently in the last 2 weeks, I've already received two notifications from two different people telling me that they received such things from Discord. Okay. Yeah. So just be careful. Okay. And I'm pretty sure there are not, not only me. I think there are many also, using other profiles and pictures to do similar sort of scams. Okay, just be very, very careful on that. Okay, just want to put this out at the early stage of today's sharing so that everyone can take note of it. Good. So with that said, let's get started and jump into today's sharing. So as usual, I'll walk you through what are some of the things to highlight, to focus, and we'll also have some Q&A time, right? So if you have any questions, you can put it up. I'll do my best to answer as many questions as we can. Okay, so let me do a very quick review from last week event. Okay, so last week was very eventful, right? There are a lot of high impact news, monetary policy statement as well. Okay, so you can see over here, starting with RBA, they maintain rates, so not much of a change over there. The one that's really interesting is actually coming from Bank of Japan. In the past 16 and 17 years, they have been maintaining a negative interest rate environment, right? And then only last week, okay, they actually started to pivot from negative easing policy into a positive environment. And I kind of share this with traders along the way, since like mid to late last year. At one point in time, the Bank of Japan needs to pivot, because their whole negative interest rate environment, their YCC, yield curve control policy, is just not going to be sustainable in the long run. Okay, and this is where this year we started to see that pivot, and that pivot is going to be very interesting, because it's a time where most of the banks are actually talking about cutting rates. Okay, and yet the Bank of Japan over here, they are looking to increase rates. Okay, and this is what we call a policy divergent. Okay, and when we get a policy divergent, and it's only going to get wider and wider, because most central banks, their interest rate is already at a peak and they're coming down, whereas Bank of Japan over here, they're at the low and they're going to go up, right? So the divergence is only going to get wider and wider as the years goes by, in terms of the direction of the monetary policy, right? And when that happens, that's where we might get a very nice trend potential in the yen-related currencies. Okay, so that's something to definitely very exciting to keep watch for the remaining part of this year. Okay, so that's something you want to add it into maybe your watch list to kind of take a look from time to time on this opportunity. Okay. And then from there, we have the FOMC last week as well. So there's not much of a change. I think the Fed, is just being kind of cautious, right? The overall statement is basically they would like to really see if inflation has been controlled, and they will continue to track whether there's really a need to cut rates soon, right? So at the end of the day, they're basically just tracking how well the economy is. Is the economy resilient? If the economy is still pretty strong, then there's no need for them to actually cut rates, right? They don't want to cut it too early and then inflation comes back in. So this is something that we as traders will continue also need to definitely monitor, right? We need to take a look at how well is the economy is doing, okay? In terms of like retail sales data, or in terms of labor market unemployment, employment data, and of course also the inflation aspect, okay? Because if inflation starts to come down and starts to maintain at a certain low level, and we start to see unemployment maybe going up a little bit, retail sales coming down a little bit, then that's again a good sign that is pushing for the Fed to actually cut rates, right? And that again would have an impact in the market. Okay. Then of course we also have SMB last week. SMB is the first central bank to really cut rates, right, from 1.75 to 1.5. But for me personally, I don't really trade the franc frequently, so I'm not really monitoring the price shift on the franc itself. Okay, but likely there are some movement because when the bank actually makes a decision, there will be some volatility. Right? Then last thing to note from last week was basically the Bank of England, very much similar to the Fed. They maintain rates and they just likely look out for the development in the future and then make a decision from there on. Okay, so those are some of the summarized version from last week. Okay, so this week here, if you compare to last week, it's generally a little bit quiet. Friday, Saturday is where the daylight saving time shift. Okay, so of course we have quite a bit of like holiday session in the Friday as well. So it's a fairly short week, right? So we only have today, tomorrow, Wednesday, and Thursday, and we don't have a lot of data coming in. Okay, so with that kind of expectation, there's a good chance this week we'll see the market consolidate a little bit, right? Develop into what we call a corrective structure, which is great, okay? Because last week we do see quite a bit of impulses, and if this week is going to be a corrective phase development, then we will get a lot of nice, decent setup moving forward, right? Because we have an impulse and then we have a correction. Those are the nice setup that I would love to see, okay? So with that said, let's jump into the charts. Okay, I'll start off with the dollar index. Okay, so you can see over here, right? Dollar index. Last week we kind of got this push. Okay, so the Fed maintains a same interest rate, but it was a positive impact in the dollar because they did not cut rate, right? Which means that the dollar maintained at a relatively high interest rate environment, and that becomes positive for the dollar itself. We did see that push to the upside. Okay, I'm overall still bullish for now. Okay, but of course we would like to see some kind of a corrective structure first before kind of having that conviction. Okay, so we want to see a corrective pushback, corrective pullback, which we may see, right? Because just as I mentioned, this week is a fairly short week and we don't have many major news, so likely the market is going to be a little bit slower, and that will build in very nicely for a corrective structure. Okay, so I'm seeing over here is that this tree wave may have completed. We get our first push. If we can get a corrective move here, then we can expect one more pushback up. Okay, so a very simple structure that I'm expecting. Okay, so that's on the dollar index. And for euro dollar, okay, it's a little bit kind of counterintuitive because most of the time if you're bullish on the dollar, then we'll be bearish on the euro. But from the technical chart perspective, I'm not tying that correlation together. I'm basically looking at each individual chart as it is. Okay, so as of now, okay, euro dollar suggests that we might be seeing a little bit of a bullish side of things. Okay, so what I'm seeing over here in terms of structure is quite straightforward. Tree wave up, tree wave down as a corrective pullback, right? Obviously we again need to see some kind of a commitment from the market to reject to the upside. Following that, a correction, okay, that will give us a nice little buy trade opportunity. Okay, now suppose the market doesn't do an impulsive bounce to the upside, but what it does is just a corrective move here. Then obviously it wouldn't be a buy trade. Okay, this would then suggest maybe one more downside. So that's why I say it's an early stage, right? We need to probably wait for a while for the market to show us some confirmation before we kind of commit to that. But for now, the structure seems to be tilting a little bit more to the upside, right? So that's the directional bias that I'll be having, right, at the moment until proven otherwise. Okay, so that's on the euro. Then for pound dollar, okay, the directional bias here is going to be bearish. So what I'm seeing here is basically we have an impulsive drop. Again, this week, if you can see a corrective pullback, that will be expecting another push down. This one here, if I zoom out, right? So in terms of the context of this chart, you can see that we may have potentially completed a 5-wave move to the upside, right? And usually after a 5-wave completion, the minimum expectation for price is to come back and retest where wave 4 territory is. Okay, I did include a 50% retracement from the low to the high as well. So it's around that wave 4 territory. And therefore, that's a simple projection, right? If you can get a correction, we'll expect one more drop. So 1, 2, 3, complete that, and maybe from there we can push back up. Okay, so that's the view on the pound, right? So this week, as I mentioned, the market will likely be slow. If you can get a corrective pullback, that would be a decent opportunity. Okay, then we have the Aussie. Aussie here, I'm a little bit on a neutral, waiting and see if we can get a corrective pullback. Okay, let me zoom a little bit. But again, if we can get a corrective pullback, then we'll be assuming one more down move. Okay, to complete that WXY, very nice little channel structure as well. Then we'll have a short-term sell opportunity, right? So we'll see how the market develop here first. Okay, which again built into this week, likely we're gonna see that corrective phase. Dollar CAD is outright neutral. We get a V shape, so I always highlight, if you see a V-shaped formation in a chart, just stay out of it. There's nothing much. Leave it aside, right? So there's really nothing there. Dollar yen, I'm also neutral. Again, very interesting where last week we had the Bank of Japan shifting from negative interest rate to positive interest rate, right? So from a fundamental framework, okay, generally traders would assume that the yen would strengthen, right? Because if central bank increase rates, valuation of a certain currencies would tend to be stronger. But this is the part where I want to share my perspective, okay? It's important to have the understanding of the fundamental framework, right? To understand generally how the economy works, generally how fundamental affects the market itself. But at the same time, you also need to accept and understand that the prices in the FX world, in fact in any financial market, is not driven by just one singular factor. Okay, you have your fundamentals, you have your sentiment in play, you might have just simple demand and supply factors pushing prices, you may have bank intervention and things like that. Basically, there are many factors that can contribute to the price movement. Okay, so this would then put traders into place where they would ask, so how do we then trade, right? Like, which one should we look at? Which factor is more important, and sort of things like that. My answer to that, my suggestion to that is pick one, but pick one as a priority, right? But understand that it's a multi-factor driven market. Okay, so I give you my personal example. Okay, I look at the charts primarily, right? So that's my primary priority in trading, right? I base a lot of my decision on technicals, okay? But I understand fundamental, right? I factor in that into part of my process as well in understanding market. I look at sentiment as well, right? I look at understanding where is generally the demand and supply from sentiment, risk on, risk off kind of things, right? But those are not my primary priority in making trade decision. The technicals are. Right? So then the next step over here, next phase is, do I really as a trader need to explain and understand every reason as to why the market moves in a certain way? I do not need that, right? In fact, all traders do not need that. Okay, because in the world of trading, there's no right or wrong answer. Okay, it's not like going to school, we have exam, there's a right answer and a wrong answer, and then we need to hit certain score to pass the exam, right? In the world of trading, there's no right or wrong answer because it's, as I mentioned, it's a multi-factor driven market. Okay, so what we really need at the end of the day is have a basic understanding of the market, have a framework and understanding, what can contribute to the movement of price. But as traders, you don't need to really understand exactly what move it, okay? Because you don't need that to make money out of it, right? So it's something where I would say it's part of a journey of a trader, because back then I also was in this phase where I keep questioning, why the market moves certain ways, right? And I try to find a reason. And the only way to break through of that is to accept the fact that you will never know 100% all the time or the exact thing that moved the market. And you need to accept that as a fact, okay? And once you'll be able to accept that and you start to move on from there, things gets a little bit smoother and easier in your trading journey. Okay, so back to this part on dollar yen, right? If you ask me, how come Bank of Japan increased rates but the yen weakened? To be very frank with you, I don't know. Do I care? I don't care. Okay, because I know that I don't need to know why in order to make money from trading, right? I just based on, well, that happened. What's next, right? What is the chart telling me? Okay, but from a fundamental framework, I know that eventually there's a good chance, if you stretch it, with a longer horizon, longer period, there's a good chance the yen will eventually strengthen relative to the dollar. Of course, fundamentally, the Fed would cut rates. The Bank of Japan will continue to increase rates. From a fundamental framework, the dollar yen would likely come down. Perhaps it's a matter of time. Okay, so that's something you need to just be able to go through. Okay, so dollar yen here right now I'm neutral, but I just want to show you from a larger time frame perspective where we are in terms of the price chart. Okay, we're kind of retesting back where that previous high is. Okay, and from a technical chart perspective, aligning it together with perhaps the fundamental framework, there's a good possibility we're going to see the dollar yen perhaps come back down and retest the bottom area here to form the big range environment. Okay, but of course we need to first see some conviction from the market price to tell us that, yeah, it wants to reject to the downside, right? Because as of now, there's no signs of rejection yet. So just be patient, right? There's no need for us to rush things through. Okay, so I hope that kind of clarifies a little bit in the understanding, or I would say, how do we deal with such situation. Okay, great. Then next year we have gold. Gold is something I'm actually having it in my watch list. So what we're seeing on gold here is we have a little bit of a divergence kind of structure, right? Kind of topish formation. We get a decent rejection. So if I can get a corrective structure development here, then I'll be interested in the sell side. Okay. I think this is pretty clear cut and pretty straightforward, right? The confirmation here is to give it time to prove to us that it's a corrective structure, and then we'll be looking for a sell. Very similar is crude oil. Okay, so if I zoom out a little bit, you can see we are in a channel structure. The market seems to be rejecting off the top of that channel as well. We have the bigger three-way structure completed, okay, in yellow. So right now, I'm actually waiting for, again, the market to do a little bit of a consolidation, perhaps by tomorrow, by Wednesday, if you can get that. Great, we have a decent sell trade opportunity and trade it back down to the bottom of this channel here. Okay, so the commodity space like gold and crude oil seems to be presenting something for us this week, if not, building into next week. Okay, S&P, we got a market push to the upside, right? So you can see here break of structure. So if you can get a corrective pullback, we'll be bullish. Okay. So the fundamental process on fundamental and macro framework on the US equities for the year itself is going to be bullish. Okay, because we are talking about potentially the Fed cutting rates. When the Fed cut rates, money is cheaper. Okay, there will be more money flowing in the economy, and some of this money will eventually flood back into the equities. as a form of investment, right? And that would then create that demand, and then it will push price up, right? So that's the kind of like simplified version of a macro framework in the equities market. So this year itself, I'm generally bullish on S&P, NASDAQ, and Dow Jones. Basically, US equities, generally this year will be fairly clear cut in the direction is bullish. Okay. Pound yen here, really nothing much. It's actually very similar to the odd yen. Okay. I'm actually in favor a little bit on the odd yen compared to the pound yen. Okay. Simply because the odd yen gives me a clearer little structure that looks something like that. Okay, the rejection down here is also a little bit clearer. So this one, we're basically looking at a corrective structure development for the week, and then we can look for one more sell trade. Okay, 1, 2, 3, very simple structure as well. Okay, so this is another one, I have it in my watch list. Okay, then we have pound odd. Pound odd here is also something pretty clear. In terms of overall structure, we're still trading in three wave. But we're trading the internal of it, right? So the bigger one here is yellow WXY. Okay, the internal here we are trading is 1, 2, 3, right? We are trading essentially the Y wave in yellow. Okay, so if you can get again an internal 1, 2, 3 here, right? A small little pullback, then that will give us a sell opportunity. Take this down. Okay, so pound odd here, I'm looking for sell opportunity 2. Okay. So if you take a look between the pound odd and the odd yen, right? It kind of go in slightly different direction. Okay, we are looking to sell the odd yen, which is selling the odd, and then pound odd here we're looking to sell the pound odd, which is essentially buying the Aussie. Okay, so this is something that might confuse some traders as well. How come that can be two direction? Again, my process, right, just to share with you how I deal with such situation is I look at each chart independently. Okay, I don't want to confuse myself, and therefore this could relate to that, and how should I trade it. I make things very simple. Okay, and the way I approach things is I look at the chart and trade it as it is, but then I also understand market correlation. But I use market correlation mainly to help me manage my exposure, right? So in this case, if one trade I'm buying odd and one trade I'm selling odd, I don't double my risk exposure on the Aussie, that's perfectly fine. Okay, because at the end of the day, there's a good chance maybe one of it will trigger my setup, the other may not trigger my setup. So I might only get in one trade anyway. So I just want to factor that risk management in it using the understanding of risk exposure, right? But I don't use correlation to trade. Okay. I mean, there are some traders who use correlation to their advantage to make trading decision. But for me, I just find that, the simplest, most straightforward way and the clearer way for me to kind of navigate in the market is just look at each chart independently. Because again, as I mentioned, right, there are many other factors that can affect it. Like in terms of Aussie yen, you have the yen in play, right? You have the risk sentiment in play because yen is very sensitive to the risk environment. Then you have the pound odd, right, which is again the Aussie and the pound, right? So you have the pound in it as well, which may impact the price of this pair. Okay, so it's not just the Aussie itself. Okay, so you need to again understand that, right? Last one, just to very quickly touch on the crypto side, right? So this is on BTC. So BTC here again, you need to be prepared of the potential halving, right? It's gonna happen somewhere between April to May, right? We won't know exactly like which day, but historically it happens every 4 years, and the previous one was somewhere around April and May last 4 years. So this time around it's going to happen somewhere between April and May as well. So definitely volatility will kick in. Historically, after the halving, prices of Bitcoin tends to be bullish, so have those in mind as well. But again, we trade what the price chart is telling us, right? So at this moment, the pattern seems to suggest that short term, if you can get a little bit of a corrective pushback, if this is corrective in nature, we may see one more drop. Okay. Now, would I be looking to sell this? I'm not. Okay. Why? Because I'm actually adding the context into this chart here. Understanding that halving is coming in, I'll be more interested to look for buy opportunity than selling it. So I would love to see this play out, but I won't ride the down move. I won't sell it. I would love for this to come down. I'll be more interested to see if you can buy there. Okay, so that's my personal trade plan going in. Right, and of course, if you are more aggressive, you enjoy the excitement of it, you can also look for the sell trade. Okay, but that's something not that I'm not likely gonna do. Right, just want to highlight on that. Okay, so Bitcoin here, something to note as well for those of you who are into the crypto space. Okay, good. Cool. So let's see some questions coming in asking about the U.S. equities, right? Nasdaq as well as the Dow Jones. Let's see a little bit. Okay, so Dow Jones over here is pulling back a little bit sharper than the S&P. But I think the overall general outlook looks pretty similar. Okay, we kind of have this little previous structure that got broken impulsively, right? Of course, this pullback seems impulsive as of now. Okay, but it's still an early sign because this can easily go back up, and then this can come back down like that, and then this will turn into a corrective structure already. Okay, so you give it time. You definitely do not just want to look to buy when the market comes into this territory, but you want to add in elements like pattern structure, right? So you want to see some kind of a three-way structure, then that will more or less give you the confirmation that, oh, it's corrective. Okay, but the overall direction here, I would say still focus on the upside, right? You still want to focus on the bullish structure itself. And then in terms of NASDAQ, right? More or less the same, but I think NASDAQ here has a slight different touch to it, right? This looks crawlish, right? Which probably it will end up coming back correctively as well. So, this may end up as a crawl and then a pullback, maybe around this territory, and then another push up. So the overall structure is a little bit different, but I think we'll likely be seeing that kind of pullback coming in. Okay, so quite similar to the S&P, right? We're likely seeing that pullback phase. Okay, yeah. So that's generally in terms of the equity side in US, right? The index, right? And then let's take a look at FTSE. Okay. Yeah, so FTSE also managed to break out very clean with momentum. So same thing here. I think bullish direction. Wait for the pullback, then you look for it upside. Okay. Yeah, pretty straightforward. Okay. You just probably need to factor in this kind of toppish environment here, which the market is basically testing. So likely we're gonna get some kind of pullback. If the pullback is corrective, then the bias is still gonna be bullish. But if the pullback is going to be impulsive, then obviously you don't want to buy it. Okay. But again, a small impulsive drop doesn't mean that we are no longer in a bullish environment, right? Because as I mentioned, this can be an early sign. This can go up correctively. You may short term expect one more drop, but overall it can still turn into into a corrective retracement in three wave. Okay, just maybe in a bigger scale. Okay, so that's on the FTSE side of things. For Australia index, okay, this is not the best among all the index. We may see something like that. Okay, so we may turn into maybe a bigger corrective structure, right? So maybe short term, something like this may play out. Right. Again, if you are more of a counter trend, perhaps you can look out for some short-term sell, okay, to complete that 1, 2, 3. If not, then you just need to be very patient and wait for the buy, right? Because I think with this kind of structure here, you definitely do not want to be buying first. Okay, so that's my take on the Australia side. Okay. Now let's go over to the Hong Kong side. Hang Seng right now. So this play out pretty neat, right? Yeah, so I think overall it's slightly developing its corrective pullback. Right, I think the channel would not look great, but I think this is probably developing something like this. Right. Be cautious as well in terms of this area. Okay, so the pullback may come in a little bit deeper. Okay, if we were to take the 15 and 618. Okay, so the pullback may come in a little bit deeper, but I think overall we're looking at this structure here. Okay, so this is all Hang Seng. Cool. Next we have OddCat. Oh, okay, OddCat is basically bouncing up and down. The conservative view on this is likely be patient, right, and see if you can get this. That's the more conservative view. Okay, we can't expect three-wave development, right? So this may actually go up a little bit, come back down in 3, then after that you look for upside. Okay, so my take here is it's probably not going to be a clean short-term sell opportunity anyway, because this is impulsive as well. This pullback, may not be very clean. The better one here, if you are going to be safe, is to just see if the market can eventually come back over here to complete the clean 3-wave move like that. Then you look for the buy. Okay, so that would be my take on the OddCat. Okay, silver is very much similar to gold, I would say. Probably just need to update this a little bit here, right? Okay, yeah, but this is probably going to be very, very much similar to gold. Just slight adjustment in terms of some of the structure points. Yeah, okay, something like that. Okay, so short term, if you can get a corrective pullback, then of course one more push down, and then we're looking for the buy side. Okay, XNG, natural gas. Okay, let's just take one of this instrument data. Okay, this doesn't look good. Okay, probably that's the low. Right, if you're looking at natural gas, obviously historical low here is about 1.4. We're trading about 1.6. I'm not a fan of this commodity, but I think if the market continue to crawl into this territory about 1.4 to 1.5, it may give you a pretty decent buy trade, right? Because then that will also turn into a nice little crawl structure. Yeah, that may be something that you want to look out for. But I think as of now, you don't want to be buying too early. So you might want to wait for a dip. Okay, you may start to look for opportunity, maybe about 1.5, or if you're conservative, wait for the break to the upside, then when you start looking for the buy. I don't think you want to be selling it anyway because it's already near the historical low, right? You don't want to be selling into that kind of territory. So definitely the direction on natural gas is going to be bullish focus, and your role is just basically wait for the setup to get involved in the buy. Okay, wait for the market to tell you, all right, it's more or less ready. It's time for you to start looking for the buy. Cool. Right, dollar CAD, we can't mention that. Nothing really is happening on the dollar Canadian side of things. Okay. Euro pound. Not the cleanest chart of all. Okay, because one way to look at it is basically this is a WXY structure, right? So we kind of got this rejected over here. Let's say 50% marks here. So likely we're gonna see some kind of a pullback, maybe towards the 50% mark. I just don't like this pair anyway, right? It's like ding donging. In fact, you look at EuroCAD, I don't like this as well. Okay, so EuroCAD has been like maintaining neutral, not really touching it for good like almost 1.5 months. Okay. If you take a look at Euro Pound, it's not something I enjoy as well. Okay, it's just the nature of this pair is gonna be very, very kind of like choppy, right? Up and down. Right, so nothing much and really exciting on this. Is it a divergent on a daily time frame at the US 30? Yeah, right. I mean, if you take the points here, obviously that's a divergent, right? Okay. Then another one is Nasdaq, right? Yeah, divergence as well, right? So yeah, those are very, very clear divergence built up. Cool. Okay, so if that's about it, I think we kind of cover a bit, right? In terms of like what are the things I'm looking at, okay, and what are some of the things to be paying a little bit more attention to. Okay. Now before we kind of conclude the session, just very quickly, touch on this as well. I mean, if those of you who have been here with us some time, I think you know about everything trading. For those of you who are fairly new, okay, so everything trading is a kind of educational platform, right, where you can actually go over to the website everythingtrading.com. If you're very new, you can click on the sign up. It's free. Okay, so obviously I already have my account. If you're new, you just click sign up. The process to sign up is pretty straightforward, right? So I already have my account. I'll just log in and show you what you see inside. Okay, right. So once you log in, you'll be able to see all the upcoming live trading session conducted by different speakers as well. So for me, I do the English session over here every Thursday. Okay, 9 to 10 in the evening, right? So again, there are many other speakers like Daniel here and Anil, right? You can, of course, depending on the time zone that you're comfortable, you can click register, and then you can join the live trading session, right? On the left, you can also see there's the Learn tab. Of course, if you're fairly new to trading, there's some educational content for you. Then there's also some advanced tools you can make full use of, right? Like Signal Center, AI News Sentiment. I won't go into details one after another, right? You can log in, create your account, log in, and then go and explore it. And of course, you also have education webinars within it. Okay. So for those of you who are not, or say, if you do not have an account at Everything Trading at the moment, just head over, sign up for your free account. Then you can make full use of all the resources that you can find inside. Okay. So, yep, that's all from me for today. I hope I kind of help you a little bit in giving you some ideas to prepare for the week. Okay, and of course, hopefully you can extract some mini lessons within today's session here as well, to help you progress as a trader too. Okay. So with that said, all the best to trading, and we'll see you guys in the next one. Okay, so see you guys. Bye bye.